Nuburu Inc., trading under the ticker BURU, is currently priced at $0.42, experiencing a severe intraday drop of $0.088, which translates to a staggering 17.38% decline for the day. Now, a drop of this magnitude in a single session for a microcap stock isn't entirely unheard of, but what we are witnessing today isn't just random volatility or a reaction to a single news event. This is the physical manifestation of a long simmering battle between technological promise and financial reality. Many investors looking at Nuburu see the potential of its groundbreaking blue laser technology and think they've found a hidden gem, a classic high-risk, high-reward play before it hits the mainstream. The expectation is that you're getting in on the ground floor of a company whose technology is essential for the future of electric vehicle battery manufacturing and advanced electronics. The reality, however, as evidenced by today's brutal price action, is that this is a company fighting a desperate battle against cash burn, dilution, and the very real threat of being delisted from the exchange. That 17% drop isn't just a bad day, it's the market's vote of no confidence in the company's ability to survive long enough for its technology to matter. Let's break down the trading activity we're seeing. The volume today is significantly higher than its daily average, suggesting this isn't a drift downwards, but a capitulation event. Sellers are rushing for the exits, and the bids are having trouble absorbing the pressure. This is a classic sign of panic among retail holders, many of whom are likely managing their portfolios through platforms like the Robinhood app or SoFi Invest, where the appeal of low-price stocks can sometimes overshadow the inherent risks. When a stock that has already been beaten down, one that recently performed a 1-for-40 reverse stock split just to get its share price back over the minimum listing requirement, starts to fall off a cliff like this, it triggers stop-loss orders and margin calls, creating a cascading effect. This isn't the orderly selling you see in a blue chip like Apple stock. This is a fire sale. More sophisticated traders on platforms like Interactive Brokers, known for its advanced tools, may have seen the writing on the wall, looking at the company's financials and recognizing the immense pressure it was under. They might be the other side of the trade, shorting the stock and profiting from this decline. The common narrative for Nuburu has always been its technology. The company designs and manufactures high-power blue lasers, which are exceptionally effective at welding materials like copper. Why is that important? Because electric vehicle batteries, motors, and their associated electronics are full of copper. Traditional infrared lasers struggle with copper because it's highly reflective, leading to messy, inefficient welds. Nuburu's blue laser, with its shorter wavelength, is absorbed much more efficiently, allowing for faster, stronger, and cleaner welds. This is the expectation. As the world transitions to EVs, the demand for Nuburu's core product should skyrocket. They have a solution to a real engineering problem in a massive growth industry. That's the story that gets told, the one that attracts speculative investment. People see the success of a company like Nvidia stock empowering AI and hope for a similar story here, where Nuburu becomes the essential tool for electrification. But the market today is screaming about the reality, and the reality is found in the company's balance sheet and cash flow statement. Nuburu is burning through cash at an alarming rate. Its revenues are not yet sufficient to cover its operational expenses and research and development costs. This creates a vicious cycle. To fund operations, they have to raise capital. For a small company with a plummeting stock price, raising capital typically means one of two things: taking on debt, which is difficult and expensive, or selling more shares. Selling more shares or an equity offering dilutes the ownership stake of existing shareholders. Every new share issued makes each existing share worth a smaller piece of the company. Investors see this coming from a mile away. The recent reverse split was a cosmetic fix to a fundamental problem. It didn't inject any new capital or solve the underlying business challenges. Today's sell-off is a direct reflection of the market's fear that another highly dilutive financing round is imminent, or worse, that the company may not be able to secure funding at all. This is the kind of stock that automated systems like Schwab Intelligent Portfolios are designed to avoid entirely, as its risk profile is far outside the parameters of a stable, long-term investment strategy. For those who choose self-investing on an individual brokerage account through a provider like Fidelity, this is a stark lesson in due diligence. So what does Nuburu actually do? As mentioned, its core business is the design and sale of these industrial-grade blue lasers and laser systems. Their flagship product, the AO150, is marketed as a powerful tool for industries beyond just EVs, including consumer electronics and defense. They operate in a highly specialized field. The business model is straightforward: sell these high-tech systems to large-scale manufacturing clients. The problem is that the sales cycle is long, and convincing a massive corporation to retool their production line around a new technology from a small, financially precarious company is an incredibly difficult proposition. Their past performance and financial reports paint a clear picture of this struggle. Quarter after quarter, we've seen significant net losses and negative cash flow. While they have secured some contracts and partnerships, they haven't achieved the commercial scale needed to reach profitability. It's a classic case where the technology is years ahead of the business's financial stability. The expectation of widespread adoption is clashing with the reality of slow, painstaking market penetration. Looking ahead, the path for Nuburu is fraught with immense opportunity and existential risk. Let's consider the bull case, the scenario where today's price looks like a historic buying opportunity in hindsight. For that to happen, a few things need to fall into place very quickly. First, Nuburu would need to announce a major company-altering contract with a top-tier automotive or battery manufacturer. Not a small pilot program, but a multi-million-dollar order for hundreds of units. This would validate their technology on a mass scale and, more importantly, provide a critical injection of non-dilutive revenue. Second, they could be an acquisition target. A larger, more established industrial technology company could see the value in their patent portfolio and engineering talent and decide it's cheaper to buy Nuburu than to replicate their technology. This would likely offer a significant premium to the current deeply depressed share price. For anyone practicing online investing, this is the lottery ticket they are hoping for. Now, for the bear case, which the market is clearly favoring today, the primary risk is continued cash burn leading to either insolvency or catastrophic dilution. The company might be forced to issue shares at even lower prices, wiping out a huge portion of the remaining value for current shareholders. There's also competitive risk. While Nuburu has a strong position in blue laser technology, they are not the only ones working on solutions for welding copper. Larger, better capitalized competitors could develop alternative methods or even their own blue laser systems, squeezing Nuburu out of the market before it ever gets a firm foothold. Finally, the risk of being delisted from the NYSE American remains very real. If the stock price continues to fall and they are unable to maintain the exchange's minimum requirements, the stock would be relegated to the over-the-counter markets, where liquidity is far lower and it would be abandoned by most institutional investors and trading platforms. Comment below with your thoughts. Do you think Nuburu can secure a major partnership in the next 6 months to turn things around? Or is the financial pressure simply too great? The expectation was a smooth ride powered by high-tech lasers. The reality is a bumpy, uncertain path with no guarantee of reaching the destination. The content provided is for informational and educational purposes only. It should not be considered as a substitute for professional financial advice. Like,